What is up, traders? Now, today is the 22nd of February, okay, 2021. This week's CBD is going to be, as per usual. I only trade, as I mentioned in the previous CBDs, I'm only going to trade GBP pairs. So mainly GBP JPY because it is a volatile pair. A lot of technicals, are perfect on that pair, and also GBP USD. So GBP USD and GJ, okay, so GBP JPY, they move quite the same, okay, so I will just share my screen, guys, and let's get started. So I will share my screen here. Okay, so I will actually show you a trade that I took. It was only for 2 hours and I made 43 pips on my big account and then 32 pips on the smaller account. Okay, so I took my trade here. Okay, so I was in this trade here, right? So the reason why it was, so that was a 32 on the small account, and the reason why it was a lot more on the bigger account because I had two entries on that account, and I entered before that breakout, and then that added to the 32 pips, so I got the extra 10 or 12 pips on that trade. Okay, so it's pushing down now, so it is pushing down, and I'll just go back to the monthly. Okay, so I will explain the boxes and the color codes later on. So GJ, you won't need to always, the reason why sticking to only 5 pairs max, I recommend 2 to 3, is because you know where this trade, like this pair, has been going. So I don't need to always look at the monthly or the weekly. Maybe every week, weekly closure. So for example, if you go on the weekly, I know that there's been so many bullish candles, so the weekly is up. Monthly, so every month you look at the candle and you're like, okay, look, it's up, up, up. So obviously the market's going up. And me trading only one pair, okay, one pair, I already know where it's been and where it's going. Okay, so I see GBP JPY. It's like, it depends on how this monthly candle closes. Like it could just create a wick and then close below the 147.50. Okay, so you can intraday this, no worries, but for these massive swings, so hang on, I'll just bring up some more tools here. So for these massive swings on the monthly, see how there's lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and then we got, no longer did we get a lower low. We created this new higher low, but then we still got that lower high here as previous lower highs, which makes up a downtrend. Okay, but me keeping this line here, this scribble line, you can see that the last lower high was taken out 2 months ago. Like, we're going up, right? Like, only look for buy trades, buy. But you're not going to be entering trades on the monthly or the weekly. That's just an overall direction bias on where the market's been going, what it's doing, okay, where it has the actual potential to go next week, next month, so on and so on. Now, bringing this information down to the weekly, we can see that, hang on a second, okay, you can see that the weekly is still up, okay. Over here, we can see clear structure on the weekly, okay, and then boom. Since this push, there hasn't been a weekly pullback. I'm actually, you know, waiting on that to happen. I'm not going to be looking for sells or any of that. So, you know, keep buying as long as the lower time frames are telling you to buy. But be very cautious of what this push is, you know, going to do, because check out the weekly. Making higher highs and higher lows, right? So technically, this push up broke the previous higher high. That's a new higher high. What happens after a new higher high? There's going to be a, you know, pullback for a new higher low, as it has before. See, push, 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 breaks previous highs, makes a new high, pulls back to make a new low, okay? And then pushes back up again. So those who, you know, hold their trades and can hold their trades for a very long time had entries here to gain a new high. Dude, like that's 1,400 pips almost. But for me, it's better to understand that that's going to happen, okay? But not have those trades open for so long, you know? I can swing like midweek swing. Like for example, I can hold trades for 2-3 days and then get out. But overall, I know where I'm going to go in the next few weeks, months. But I don't need to hold that many trades that long. Okay, those who can, hats off to you guys. You know, but I found that you can, you know, get a lot more opportunities in the market and more pips if you catch all the swings to where the market's going in the next couple of months or weeks or whatever, okay? Now, bringing this down to the daily, you can see that also the daily, and what helps is these monthly and these weeklies, okay? So you see that this candle here, this daily candle here broke, okay? This was once a weekly resistance, now support, because it broke, retested, made a new higher low, and then we can aim for the next weekly. Now, the pip ranges between each weekly and monthly is 250 pips, okay? It says 249.5, but it's not exactly on the line here, okay? You can see that it's been struggling around that monthly resistance, which was once resistance, and then broke out, retested, aim for the next weekly. That weekly broke, go for the next monthly, okay? That monthly broke, look, we went for the next weekly resistance. Now that resistance, I'm very cautious about this daily doji here. We have a bullish engulfing here, that's no worries. But our overall target, okay, our overall target is this bad boy here now, okay? Do we need to enter here and then, you know, let that ride? Sure you can, okay, sure you can. But on the lower time frames, it's starting to mess about here. So I would really need, and there's no real nice Fibonacci pullback. See, there's nothing really there yet, so I would really need to see a good pullback for a swing. So the best thing for me would be see how it keeps testing here. So with this orange, green, and red, they're my zones. Okay, so they're my demand zones. How to draw demand, how I draw demand is the bottom wick to the candle close, okay? So that's my daily. The 4 hour is going to be green. So the wick, hang on. This wick to the next candle body close, okay? Because it's perfectly, even if you drag it to the left, it's perfect, you know? Support and resistance to me is an area. It's not just one single line, okay? That does help, but it's within that area, okay? I've tested this time and time again. Support and resistance to me, and to a lot of, traders who understand this, it's an area, okay? That's why I have this boxed out. The weekly, you don't really need to do that. You can, if you want to, create that into an area, but with me, I prefer to have the weekly as a line and the monthly as a box. It works with psychology as well, because you know that the weekly looks like this and the monthly looks like this, and then you got your daily zones, your 4 hour. Now bringing this down to the 1 hour, I have these orange zones, okay? And that's what brought me to my attention was I seen that how the market works is it needs to break the previous high. See how each time it breaks the previous high, okay? So even here, I always now, okay, what makes me very consistent these days, even more so, is I wait until the recent high is broken. I then wait for a retest, bit of consolidation, rejections, okay. There might be even a demand zone there, a fib, okay, point A, point B, C, and then D. And then I'll wait for some sort of rejections. In this case, this wasn't a counter trend breakout. To me, this is testing within my dynamic support and resistance. So in this case, it's the support. Okay, it's in between the blue and the red. All right. Over here, for example, this would be definitely a counter trend break. All right, and even more so here. This was the breakout candle. On lower time frames, you may get a lot more opportunity. Okay. Just give us a sec, guys. I'm going to pause this recording, and I'll be back with you shortly. Hang on, where am I here? Okay, so I'm back. Yeah, so these orange zones, okay, they are my 1 hour zone. Okay, so things can get a bit risky, knowing that we could be expecting some major daily and weekly pullbacks because of the higher time frames have broken previous highs. Overall, we know that we are up. Okay, we are up monthly, weekly. The only thing that I'm waiting for overall in the next few weeks, months, or whatever is for that weekly pullback. Okay, but should I have to wait? Should I have to wait that long for a setup to happen for multiple weeks and months? No, you don't have to. But keep it in the back of your mind. And this is why it is very crucial to only have you know, 2 to 3 pairs. You know, there's so many currency pairs out there, right? That you can trade, but you need to, you know, live and breathe through these pairs. You need to know where they've been, what they're doing, and to keep up with 30 pairs, whatever there is, oil, gold, silver, fucking, you know, in indices, all these pairs, it can be a brain fuck, you know. It can honestly um, hurt you emotionally, okay? So please promise me that you will stick to 2 to 3, 5 max, okay? If you really want to be looking at multiple pairs, I don't recommend it. I really don't. But stick to 2 or 3, and then you will start to see results, because you can catch all these moves. You don't need to be looking at other pairs. Yeah, it's nice to be like, oh, I sold AU and I bought GJ, and then I played around with. It's like, yeah, that's cool. You know, like you want to trade different currency pairs. It's exciting, but after so many years, you come to the conclusion like, all I'm gonna do for the rest of this year is trade GJ. Okay, if GJ comes to shit, like it's just going to consolidate for weeks and weeks and weeks and weeks, and I just can't find any trades, then yeah, like I might consider looking at different pairs. But being so volatile, you can profit like every single day from the time that the market opens on, you know, in the US, it's going to be Sunday, but here in Australia, from Monday to Saturday morning, okay, like it's like 7 o'clock or something on the Saturday morning that the market closes. I hardly even trade on a Friday, okay. If I'm happy with my trades and the amount of pips that I've made and the profits that I made, I don't need to trade on a Friday, because sometimes holding trades over the weekend, you know, can be risky, because some people don't have a stop loss. You know, some people have huge lot sizes, and if that changes, if the market changes over the weekend and, you know, creates gaps the next following week on an open week, you know, like you could blow your account or be in some decent drawdown, and that's not what you want, guys. Okay, so now focusing on this area here is where I made my 32 pips and then my 43 pips on both separate accounts. I was focused at the recent prices here. Okay, taking in the information that I explained earlier in the back of my mind, but all I'm focused is, am I going to be in this trade for a swing or for a very short term, okay, time? I told myself I'm going to look for a quick trade, okay, quick trade, because there's no swing opportunities in this trade. Like, you know, there's a lot of small candles and things like that. But in saying that, I'm aiming for this here, okay? I'm aiming for the monthly resistance, but I want to see a daily or 4-hour setup for that to even happen. You know, like nice pullbacks like this, and then you can consider reaching the next key level weekly or monthly, right? Things like this, you know, pullback, breaks. With me here, I'm looking at re-entering again. So price was somewhere around here, okay? I'm not going to be, you know, buying when I can see that the market did not break. The market did not break this high. You know, it made this new lower high. So I'm like, okay, let's, you know, go back to the daily, the 1 hour, and be like, All right, so this is a 1 hour high, okay? The recent high. So it's expecting a pullback. So then I come down to the lower time frame, like the 15 or the 30, and be like, okay, let's wait for a pullback. So we got this pullback. Do we have a fib? So I drag my fib from previous lows on the 15-minute to the 15-minute highs. Okay, because this high was broken. Now we're focused on this high here, right? Delete this, delete that. So we had that pullback. It came into our zone that we like to focus on, the 50 and the 61.8. So let's just turn that into like a yellow, okay? And then it rejected that, created a pin bar, and it went up. I was really, like, I could have entered at that pin bar and then got a lot more pips, right? But in my head, I wanted to see some sort of crossover, you know, like a moving average cross. Like it happens here, here, here. But then I realized, hang on, it broke these highs here, okay, and then it done a small pullback. So I went down to the 5-minute, and then I seen that, okay, we have a counter trend break here and cross here. So our cross on the 5-minute was here, and our breakout candle was this candle here, right? So then I waited for some sort of pullback as well, and then I can see that there's a bullish engulfing. So I was in a little bit of a drawdown for a short period of time, and then I entered this off purely of this engulfing. So this went down, rejected, and closed. So I was like, okay, it's struggling. It's actually giving me, you know, the idea that it's testing this area here, testing the moving average, which is bullish, right? And then it started to break to the highs, and then it created more bullish engulfings. And then I seen this, and I'm like, yeah, you know, keep holding that trade, keep holding that, you know, short-term trade. And I told myself I would be okay taking my profits at these previous highs. Now, those previous highs are highs for the 1 hour, the 4 hour, and the daily, right? So I was happy to just, you know, catch my 40 pips, 30 something pips, and then get out. Because also, it started to make rejections over here. So what I'm looking for here is some sort of crossover. So if these moving averages cross over, all right, on the 5-minute or the 15, depending on what time frame you want to be looking at, then we may truly have a fib again, right? And we can be aiming for the highs again, or the extension of -27, right? And that's it, guys. You know, that's how I break down the charts. I'm not going to go into other pairs as much anymore. I can look at GU because I only have. I'll add GU to there as well. GBP USD. So GU. Hang on. GU, same thing. Okay. GU done the same thing. Broke. All right. So the demand zone is around here. So wick to wick, because the body's quite small. Broke these highs. Break these highs, okay? So I'll change that color. Break these highs, retested, okay? Then crossed over here. See how there's a crossover? And this candle here is a breakout. Also, we have a fib, okay, into our zone here. And also the zone of the golden zone, So the zone that we like is the 50 and 61. If it goes past that, as long as it doesn't break the lows, then it's still valid for a uptrend, okay? So we could enter there, right, and then ride that to the previous highs over here, okay? And that there is a good quick 29 pips. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. In about 50 minutes or something, just under an hour. If you had a standard lot, that's $290 in just under an hour, okay? For 0.10, so a dollar, that's $29. And then if you are using like 10 cents, then that would be $2.90, right? Overall, GU still bullish, same thing. It's breaking this resistance here. You know, breaking that down from the monthly. You can see that, you know, created this. In this case, it broke these highs, made a new higher pullback, higher low. And if we get a fib, so monthly fib, 38.2, and look at that. 1, 2, 3, 4, 5 months, and it hit the monthly minus 27. It's heading to these highs here, right? So we know that the monthly is up, the weekly is up. If you were to, you know, hold that buy from the beginning, somewhere here on lower time frames to where it is now, that's 1,300 pips. So we could be, you know, getting a pullback at some point, but for the time being, catch those swing moves, you know. Daily time frame and the 4-hour is where your swing moves are going to be. So you broke these highs, pull back, buy here, 357 pips. Now within this push, there's so many intraday moves, you know, 20, 30, 40 pips. But if you're confident with, you know, if a swing move sets up, see, at the moment, there's no swing move. There really isn't, you know, like there could be something here and around here, but a swing move to me has to respect a fib. See, that's a zone right there. That there's a zone, right? All these moves, all these broken highs and retests, they're all fib moves. So they're valid for a swing trade, right? But at the moment, the last high on GU that was broken was this, right? These are all just continuations and just shit that a fib hasn't even touched yet, right? Nothing, 38.2. So we could be looking at this coming down eventually and then being a swing move. So you could catch some intraday stuff. So here, 4-hour had swing moves. See how the 4-hour looks a lot better from the bottom wick to here. It's not a valid fib, but there is a pullback that you can get into. So this is like a resistance, support, okay. Also demand area down here. So you could scale into this area here. And yeah, you understand that, look, it's pulled back here. So this could be a 1-hour fib. So this low here, these highs. And then you can enter here on a 15, 30, or 5-minute. So your entries could be somewhere over here. And you can aim for the previous highs. And because the highs are so close to that weekly resistance, you know, it's now support, but it was once resistance, and you can aim for that. So you would be entering a buy here, and then, you know, a nice easy 60 pips in 1, 2, 3, 4 hours. That's 590 or 600 bucks on a standard line. Okay, $59 on a dollar and $5.90 on 10 cents. People who are using like 10 lots, things like that. So 59 pips on a 10 lot. Okay, so 10 lot is $100 times 59. That's $6,000 in 1, 2, 3, 4 hours. And mind you, you know, you look at these opportunities with these lot sizes, but to actually use 10 lot, you need to have an account balance to suit that lot size. Okay. Over here, so you can go to a 4 hour here. See how this 4 hour broke? Mind you, there's some nice intraday setups over here, but then we, you know, like the market gave us a swing trade, 38.2, right? Scale in, go into a 1 hour, 30.15, and place your buys in here. 80 pips to the highs, extension 130, and then extension 2 is close to the monthly resistance, so that's 213 pips, right? Once again, pull back from the lows to the highs, okay? Pull back into our zone, into our zone that is perfectly in line with previous structure resistance here, right? Test, 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 small candles, dojis, pin bars, things like that. Scale in, 30, 15, 5 minute, right? Catch that whole move. So enter here, 107 pips, and then check out this minus 27. It is on the dot. It's on the dot of the monthly resistance. Is that confluence or not? You know, you can have a trend line here. Look at that trend line bounce, third. So 1, 2, confirmation, and then third point bounce, fib, A, B, C, into our zone, previous resistance, consolidation. Check out this. Crossover, guys, okay? Puts. Where are we now with, so we can leave that trend line there. Previous highs, we're here, all right. Do we have a fib? Do we have a fib from here? 38.2, nothing. Nothing, see? No fib. No 4 hour fib. But you could have scaled into this order and then caught this. So let's go to a 1 hour here. Okay, and then you could have got this bullish engulfing here. So respected this resistance, pulled back into a demand zone. So here, and then you could have caught an easy 36 pips, depending on what lot size. Okay, so one lot is $10, 0.10 is $1, 0.01 is 10 cents, right? But obviously you can have 2 lots, which is $20 per pip, 0.20, that's $2, and then 0.02, that's 20 cents, right? So the options there. 5 lot, it's $50. Okay, so if you had a 5 lot on this, So if you placed a 5 lot and caught 35 pips, so that's $50 times 35 pips, that's $1,750. Okay, $1,750 in 1, 2, 3, 4 hours. Let's go into lower time.